Manufacturing and non-manufacturing PMIs crash. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I'm putting off mowing the lawn this Saturday until after I do this video because some important data was released today from China. These are the manufacturing and non-manufacturing PMIs. Now, the consensus for the manufacturing PMI, which is one we all need to be worried about, was that it would be 46. It was previously 50. The forecast was 45, but the actual was 35.7. And that's a huge difference. We can jump here to have a look. Look at that, guys. Let's just pull out to the max of the data. We're worse now than the GFC. We're worse than the GFC. So the official NBS manufacturing PMI in China plunged to a record low of 35.7 in February 2020 from 50 in the previous months and missed market expectations of 46 amid rapid spread of the coronavirus outbreak that disrupted the country's supply chain. Output 27.8 versus 51.3 in January. New orders 29.3 versus 51.4, and new export orders 28.7 versus 48.7, all slumped. Wow. One thing you have to remember with these PMIs, guys, and it's the Purchasing Managers Index. That's index, isn't it? Intentions. No, Purchasing Manager Index. Is that 50 is neutral. So if you're above 50, it's generally going well, or the market sentiment is positive, that's improving. If you're below 50, it's bad. That is a shocking fall. Now you may hear some additional commentary from Odelia. I think she wants to be in this episode today. So, also, buying levels plummeted 29.3 versus 51.6. And employment contracted much steeper, 31.8 versus 47.5. So employment was already pessimistic and it's dropped even more. On the price front, input price inflation slowed, 51.4 versus 53.8, while selling prices dropped much steeper, 44.3 versus 49.0. Looking ahead, business sentiment deteriorated sharply, 41.8 versus 57.9. I mean, none of that can be surprising. We'll scroll down here. We'll read a little bit about this index. So, in China, the NBS Manufacturing Purchasing Managers Index measures the performance of the manufacturing sector and is derived from a survey of more large-scale state-owned companies. The Manufacturing Purchasing Managers Index is based on 5 individual indexes with the following weights. New orders are weighed 30%, output is weighed 25%, employment is weighed 20%, supplies delivery time 15%, and stock of items purchased 10%, with the delivery times index inverted so that it moves in a comparable direction. A reading above 50 indicates an expansion of the manufacturing sector compared to the previous month. Below 50 represents a contraction, while 50 indicates no change. So the fact that all of these are down so much, what is that going to tell us, guys? And what we'll do is we will just jump to the OEC, and I will have a look. We'll look at countries. We'll just go to China, guys. Now, this is China. Their economic complexity is 0.69. They're 33rd in the world. Look at what they're exporting. Look at the complexity of, broadcasting equipment is their biggest export. Isn't that interesting? Top exports for China are broadcasting equipment, computers, office machine parts, integrated circuits, and telephones. Using the 1992 revision of the HM system classification, its top imports are integrated circuits, crude petroleum, iron ore, cars, and gold. So, the top export destinations for China: the United States, Hong Kong, Japan, Germany, South Korea. And the top import origins are the rest of Asia, South Korea, Japan, the United States, and Germany. So these are the economies that are going to feel it. But don't think Australia isn't going to be affected as well, guys. Because all of these businesses that are importing all of these products from China that are depending on these manufacturing businesses, even if they've decoupled. Some of them haven't, and getting components. All of it still comes from China. It's going to have a flow on. It's going to have a flow on, guys. Let's have a look at the destinations. We're 1.9% the destination and 5.5%, while Australia is sitting at about 35% or 25%. No, 35%. We'll bring up Australia. We'll have a look at Australia. What are we sitting at for our exports and imports to China? Well, our imports, that's what we're importing. Our destination's 35% China. Origins, 24%. Yes, you think that. 24% from China. There you go. I'm gonna put you back here in this chair. You be quiet while we talk about the exciting world of manufacturing indexes. So that's the manufacturing index. Let's look at the non-manufacturing one. And guys, it's pretty much the same story. Look at that dive. Look at that dive. We'll go to the 25 years. Wow. Wow. That's even worse than the GFC. Look at the GFC. Guys, look at the GFC. Compare that to this. So the official NBS non-manufacturing PMI in China tumbled to a record low of 29.6 in February 2020 from 54.1 in the prior month, amid mounting fears over the spread of the COVID-19 cases that led to quarantine measures and travel restrictions. Both new orders are 26.5 versus 50.6 in January. Overseas sales, 26.8 versus 48.8, plummeted, while employment shrank much faster, down to 37.9 versus 48.6. In terms of prices, input costs fell sharply down to 49.3 from 53.3, while output charges slumped 43.9 versus 50.5. Finally, confidence plunged to 40 from 59.6. So there you have it, guys. Similarly to the other one, crashing. So let's have a look. Let's have a look at this article from Zero Hedge to get their take on this situation. I mean, we've been talking about it. It's going to have an impact on the Australian economy. It's, sorry guys, it's difficult to do this sometimes. She's invaded me. Rachel is out, so Frederick's behaving. But Odie has decided she wants to be a YouTube star. Yes, you can see yourself there. Let's have a read. China reports catastrophic data. PMIs crash to record lows, confirming coronavirus collapse. 1 week ago, ahead of today's China data release, which would for the first time capture the devastation from the coronavirus pandemic, we wrote that to those who have been following a series of high-frequency daily indicators of China's economy, it will probably not come as a surprise that the world's second biggest economy has ground to a halt. Its GDP set to post the first negative print in modern history. To everyone else who is just catching up, we have some news. It's going to be bad. Specifically, we say that ahead of official Chinese economic data, which will soon start catapulting the period when the coronavirus crippled the country's economy, Nomura's chief China economist Ting Lu pointed out that China's Emerging Industries PMI, EPMI, which gauges momentum in the country's high-tech industries and is closely correlated with official manufacturing PMI, slumped to 29.9 in February, down from 50.1. Look at that. So they were positive in January, and now they're down to 29.9. You're not making this very easy at all, are you? Never work with children, guys. Its lowest print on record, which was a pure reflection of the devastating impact of the COVID-19 outbreak. So we can see this chart, the EPMI month-on-month change in grey. Look at that red. Look at that change from February. And that's the official manufacturing PMIs. And we've seen that's also crashed, guys. That's also crashed. So what would this mean for the more closely followed China manufacturing? As Nomura added, even adjusting for seasonality and expected progress in business resumption in the coming weeks, we estimate the official manufacturing PMI could drop to the 30 to 40 range in February. So, in retrospect, it turns out that Nomura's dive forecast was optimistic. because moments ago, China's National Statistics Bureau reported the latest February PMI, and they were absolutely catastrophic. Manufacturing PMI crashed to 35.7 in February, far below the 45 consensus estimate, and sharply down from 50 in January, a record low. Non-manufacturing PMI plummets to 28.9, also far below the 50.5 consensus estimate, and nearly down 50% from the 54.1 in January, which was to a record low. So, look at that chart, guys. Look at that chart. You're just all happy. It's great being a kid, isn't it? It's great being a kid. I'll count you appearing here as a positive episode. You know, positive episode. Putting these numbers in context, they are far, far worse than the prints for both series reported during the financial crisis, when the manufacturing PMI dropped to only 38.8, while the non-manufacturing PMI never even contracted. And we just saw that there. Now she's going to my face. What is even more ominous is that while China's non-manufacturing PMI has traditionally been stronger, in February not only did it collapse into deep contraction, but it plunged to 5 points below where the manufacturing sector currently finds itself, a catastrophic 20 handle. This means that China's service industries, long seen as the guiding light to China's successful transition away from a manufacturing-led economy, is now devastated. Commenting on the unprecedented number, Bloomberg's China economist Tim Orlick said that the first credible gauge of how China's economy is faring under virus lockdown, the official PMI, is pointing to a brutal drop into contraction. Well, anyone who has read a recent series analyzing high-frequency real-time Chinese data already was aware of the catastrophic collapse in China's economy. Of course, we are confident that, as so often happens, the market will take these numbers in stride, as they will be an indication that China is kitchen sinking the collapse, and a V-shaped recovery will follow. Alas, it won't, because while not only has China's economy not picked up even modestly, but it is only a matter of time before Beijing, which has forced people to go to work against their will, succumbs to a second wave of coronavirus infections, one which will result in a far worse economic collapse than the current one, which incidentally has yet to show any actual recovery. Well, there you go. Their electrical consumption is still well below normal. So all the signs, these are the other indicators that they're using to assess the economy here. You can see that there. Look at their electrical usage. That's a sign there, just a way of measuring the economic output. Finally, for all those expecting that Beijing will unleash another massive stimulus to kick-start the economy at any costs, we give the last words to Nomura Article, who not only correctly predicted the plunge in PMIs, but also says that the likelihood of another round of massive stimulus appears low as policy space remains limited. We believe markets might underestimate the scale of the current growth slump due to a slower than expected rate of business resumption. We have cut our year-on-year Q1 real GDP growth forecast to 3% and expect Beijing to ramp up policy easing measures in coming months. That said, the likelihood of another round of massive stimulus appears low as policy space remains limited. Well, that's one thing to consider here, guys, particularly for us in Australia. In short, for China, which was the world's growth dynamo during the global financial crisis and helped the world rebound from the 2009 global depression, while raking up tens of trillions in debt, the end of the economy road may finally be here. And with that, the same thing may happen to Australia, guys. What do you think this will say for our economy here? What will this lead to for the Australian economy? Where will our GDP go this year? We have to. I'm really interested to see the GDP forecasts that come out of Australia. Remember, the RBA is predicting growth here in Australia. We'll have to see. Take care, guys. Thank you all for watching. Please like, share, and subscribe to the channel. Thank you for Odelia for joining me today and making it a very challenging recording. Yeah, adorable. Sometimes. And then, if you want to support us, there are a few ways you can. Patreon, You can join with a monthly donation. You can join the channel here on YouTube. You can use our affiliate links at Amazon or eBay or Independent Reserve and Kucoin for your crypto trading. We also have a PayPal where you can make a direct donation, or merchandise we sell on the HeiseSays website. Take care, guys. I will see you next time, and I'm going to go put this one to play in another room. Bye for now.